Hello, everyone. Welcome back. So today I want to talk briefly about the 4 stages of wealth. And these are stages that I guarantee you have not been taught about. We do not learn these in most books. We do not learn these in our middle school or high school or college. So this is what I've learned to be truth. And again, I'm only 36, so I've not hit my later stages of life. But when I evaluate the proper way to build wealth and how you get there, this is what I think is the answer. Okay, so again, there are 4 stages, and let's begin now. The first one is, and what they should have been teaching us in college, and Robert Kiyosaki talks about this too in his book, but initially, I think from the age of around 20-ish or so, probably to about 35, okay, you should be doing things to maximize and generate cash flow. Everything that you do should be thinking about cash flow. All your savings, for the most part, should be put into cash flow. And that can be in things like real estate rentals or private money lending notes or side hustles that generate cash flow to build your income producing assets. Okay. And this is what I talk about in one of my videos on the wealth accumulation model. It's this idea that you're almost flywheel, and in your early 20 to 35 years of age, you're slowly pushing that flywheel, right? And that will pick up in a later stage of life. Okay, so age 20 to 35, you're really focused on purchasing income producing assets or putting your money to work for you. Now, if you have a W-2 job, totally cool. And if they have a 401k match program, you should obviously take advantage of that. But beyond that, and we're probably going to get a lot of pushback on this video, but beyond that, you should really probably not be thinking about stocks right now. That will come down the line. Right now, it's about cash flow producing assets, okay? So that's the first phase. After 35, you begin to allocate some of your assets or your net worth into things that will build long-term wealth, okay? So think about stocks, right? And in the stock portfolio, you're still going to be targeting high growth, higher risk, stocks or companies, okay? So tech would be a great example. Apple, Alibaba, Square, Roku, big names that are generating high growth numbers, okay? Or even Tesla, and this age is around, 36 to 45, give or take. And in this stage, you'll allocate about a third of your overall net worth into these, long-term wealth growth assets, okay? Again, 2/3 of all your production of wealth and production of cash flow goes back into these income producing assets. So that's still a big focus through the age of 45. Now, once you hit 46, through probably 55, you're now going to be allocating about 2/3 of all your assets to things like stocks and bonds, and pulling back a little bit on the risk of those long-term wealth accumulation assets, okay? So now you have about a third of your cash flow that's being produced from your income-producing assets reinvested in income-producing assets, while the remaining 70%, give or take 2/3, is going towards long-term accumulation, okay? Now, when you hit over 55, you're now trying to preserve capital. And really, for the last 10 years, you've been doing that too. And there are strategies that I talk about. One is very well known, called the all-weather strategy. And that generates 8 to 10% return on your money. So that'll be a great way to preserve your capital as you get out of the income producing assets and more into the long-term wealth accumulation. Okay. And then lastly, once you hit over 55, I would say around 80% or even more are now part of the long-term wealth accumulation capital preservation model. Okay. So you're still taking your cash flow at 20% and reinvesting it in those assets, but a big chunk of where your money is now going to is to stocks, to bonds, commodities, gold, what have you, okay? Bitcoin to some degree. And so I say all this because what ends up happening is if you really focus on the cash flow producing assets early on and even through about 45, you end up building a model that generates so much cash that it substantially goes beyond what you even need to live, right? And so just naturally, you're setting up a way to fulfill your life, to sustain your life beyond working your W-2. And that's going to fuel your investments down the road, okay? So you're really going to build up that cash flow nest egg and then begin to put your money into more capital preservation assets. And I'll leave you with one last thing. A lot of the big investment firms, the hedge funds, the boutique advisors, they target a 15% return on money, okay? And this is a return that generally, from a return standpoint, beats the market. And they target this 15% number because that is a number that will double your money in 5 years. So they're looking to double their money in 5 years. Okay. So the beauty about cash flow investments, you easily hit 15% if you're doing it correctly, right? Again, our clients are hitting 17% on average on our private money lending deals. So they're doubling their money about every 4 years. So a year ahead of the curve of most of these boutique firms. So when you think about returns, a lot of people that I meet are hitting or trying to hit these home run 30% returns. You don't have to do that. You'll get there if you just build the right model. Okay. So again, early on, all about cash flow. Second stage, still a lot about cash flow, but beginning to move into the capital preservation, long-term wealth. Third stage, other way around, mostly long-term wealth and capital preservation. And then lastly, you're predominantly in long-term wealth accumulation. And a great strategy is by Ray Dalio called the all-weather portfolio strategy. That's a great one to think about as you think about preservation of wealth. So hopefully you found that helpful. That's my little tip. And by the way, later on this week, I'll be showing another video of a great debate with Kevin O'Leary and Kathy Wood and a number of others talking about things like health tech, Bitcoin, innovation, how to be investing right now, and a number of other things. It's an hour-long episode. It's fantastic content. So look for that as well. Thanks, everyone.